Sudeep Shah is also with us on the show. Sudeep, what's your verdict on the market mood right now? Is it headed lower? And if yes, what's the floor for the market, if any?
Good afternoon, Anisha. Absolutely. See, what we're seeing in the last couple of days is that that's complete down. Nifty is in a downtrend, and last four sessions we have seen Nifty having a lower top, lower bottom formation, and today it has convincingly broken its 20-day exponential moving average, which was at around 22,550, 22,560 mark. So I feel till the time this zone of 22,600 now does not cross, or Nifty is not able to sustain above this zone, Nifty is headed down, and the first support from the current levels would be around 22,250, 22,270 zone, the same zone from where there was a breakout on the 16th of May. So I feel that zone would now get retested. 22,200, 250, 22,270 will now act as a strong support on the downside. And that is exactly the zone from where there is a rising trendline support zone also. So I guess all in all, 20 to 250, the most important level in my opinion.
Okay.
All right, so that's the take coming on the market. So let's bring on board Sudeep Shah as well. Sudeep, very good afternoon. So I beg your pardon. Sorry, Varun Saboo is also joining us on the show. Varun, let's talk about the markets. We did speak about what's happening a short while ago about metals, as well as we spoke about the banking names. But let's talk about the pharma names. Over the last 15 minutes, no doubt we've seen a fall in the pharma names. But off late, not many are actually talking about the large cap pharma space as a whole. What's your take coming on the large cap names in the pharma sector? Because we've seen a lot of the mid cap companies at least perform a tad bit better in the earnings, isn't it?
Hi, Irina. Thanks again for inviting us to your show. Yeah, obviously, so pharma had a very decent run, which we saw for the last few quarters that these stocks were doing very well. Uh, per se, the results and performance, I think most of them have delivered quite decent numbers. So I don't see a challenge in the way they have performed. It's just that it is about positioning, right? We are seeing across the market that positioning is coming off. So it's just that the event risk, which is keeping people a tad away from the markets right now, people are going lighter to see how it pans out. Honestly, today is the expiry day where probably you're seeing positions coming off. I see all this as a big opportunity where one should look to add names, be it pharma or any other sector.
Point taken. That's the view coming in on pharma. For now, the pre-market rates from the US hasn't really turned that much. It's still 300 points lower for the Dow, and the Nasdaq too is down 70 points. But for what it is worth, there's a bit of a bounce back in the Indian markets. So from that 22,430 thereabouts, we've made a bounce back of almost 40 to 50 points, and we're now climbing very close to 22,500. Let's pull up some of the banking names as well, because they have been the big outperformers today. At least they were holding on to the green even by a smidge. So there's a bit of a recovery on HDFC Bank. Other names like ICICI, SBI will also come up for you on the screen. And these are the names which are actually holding out. Varun, is that a better trade right now in your books? Because that's what everyone is thinking about as to the FII coming back. And today, of course, Goldman Sachs wrote that big note about how historically we have seen after the election verdict, FII flows do tend to catch up. And if it does happen, then clearly private banking names should be the beneficiaries.
Absolutely. So you answered it in scenario where we see continuity in the government. So obvious that FIs will have to come back. They have been selling and they are feeling the brunt of it. So they have been major underperformers versus how domestic mutual funds or domestic funds overall have captured this entire rally. And the big miss out has been for FIs. So the only space which is left out where valuations are still comfortable is the banking space. And also one has to keep in mind where there are concerns again building around the yields in the US, etc. There will be some profit booking which you'll see in the tech pack and in the metals pack in the near term, which should help financials pack also overall. So it's just a shift that you keep seeing, which is happening. Honestly, I would be very positive across all sectors for now, particularly banks to lead the pack, IT and also metals going forward. Yeah.
All right, let me come to you then, Kunal. Let's talk about what exactly is happening, especially in the broader markets, because the carnage there is pretty steep when you compare it to the benchmark indices in trade today. Where do you see the broader markets actually headed? We've spoken a lot about Nifty Bank, but the broader markets in particular, do you think more pain in store for that particular segment?
A few days back when the large caps started to move up higher, I made this call that the mid caps and small caps would tend to underperform. Large caps would tend to outperform, and I think that's largely, I believe, that as an overall trend it's playing out, because the markets are now heading into an event, so it's going to be balancing out of positions, trying to ensure that most part of the risk is out of your portfolio, or at least some bit of balanced risk is only the one which remains as part of your portfolio. I think in that sense, mid caps and small caps are the first pocket where, and especially for the stocks and sectors which have been doing exceptionally well, that's where money would be churned out. And you look at the last 4-5 days of pattern, the PSU stocks, PSU banking names, metals, commodities, etc. The pockets which were doing exceptionally well, those are the pockets where you're seeing trimming of gains and positions happening. And I think that's a very balanced kind of a strategy from the markets. And on the other hand, what you're seeing, the underperforming names, for example, the FMCG stocks start to show signs of recovery. Pharma stocks, which have been doing pretty well, they have started to see one more leg of price up move. Private sector banking stocks had seen a good cover up of their underperformance. So I think it's more of balancing of risk which is playing out in the last 4 to 5 days. Once the event is out of play, I would believe, and if there is assuming status quo in terms of market expectations, then we may probably see the mid caps and small caps coming back again.
Yeah, but talking about some of those mid-caps pharma names, take a look at Markson's Pharma, 12% cut if I have it right on my screen. Alchem Labs is down 6%, has been trending lower since the start of the trading session. Cummins has piled on further losses now, 6% cut there. Hindustan Zinc has retraced completely. There's a 5 to 6% cut coming in there. And talking about the coming week, it's not just about election verdict. It's going to be a very, very heavy week, given the fact there's also RBI, MPC meet in the coming week. So the market clearly has a lot to watch out for. And ahead of that, it wouldn't be a bad strategy to go light. But talking about just tomorrow, we have the India GDP, which will be out tomorrow. So we are watching out for that. China manufacturing and non-manufacturing PMI is going to be out, and that does have an impact on the metals stocks back home and the commodity prices, and that's the reason we watch out for that closely. TCS AGM is tomorrow. Of course, there's a special dividend, etc., but the commentary coming in from the management would be fairly important. You also have Inox Wind and REC boards, which are likely to meet for a fundraising. Tomorrow will be very important in terms of the setup of the trade, because it will be the start of a fresh expiry. It will be the last day before markets react to exit poll. It will be the last day before the auto stocks react to the auto sales data. So I think, of course, today is a bit volatile, but tomorrow is going to be a very topsy-turvy ride. So just setting the context for that. But talking about the topsy-turvy ride, ahead of that, Sudeep, what kind of BTSC trade would you recommend for our viewers, if any? It could be STBT also if you want.
Sort of STBT, since markets have already fallen this much, I do not want to take any open calls on the downside. But one stock which I like and which is from the large cap space is Bharti Airtel. Now, if you see here, this stock is even trending higher compared to its April highs. It's created a new monthly high. And secondly, if you see, while Nifty has been cracking 3.5% on the downside in the last 3 sessions, Bharti Airtel has gained 1%. So there is some sense of higher relative strength which is visible here. And looking at the daily, weekly, and the monthly charts, the structure is very strong here. So I feel from a positional perspective, from a medium-term trader as well as an investor standpoint, this stock looks good from the current levels. 1350 could act as a strong stop loss on the downside. And on the upside, I feel levels of 1415, 1425 could be visible.
Just since we're talking about Bharti Airtel, Sunil Bharti Mittal did speak with Economic Times paper today, and he's clearly articulating how ARPU has to move to that 300 rupee mark. The timing of hikes is what everybody has been waiting for, but the balance sheet will not be strong enough until and unless they go to the level of 300 rupees on the ARPU. They're 209 thereabouts in the quarter gone by. And I think that's one of the big talking points as to whether the tariff hike happens after the election verdict or not. That's pretty much factored in by the street, and if it doesn't happen, some of these stocks might correct. But talking about the BTSC trades right now, Kunal, what's on your list?
So I'll go with two buy calls. Exide Industries is something which I've been bullish on. Looks attractive at current levels of 498, 500. So would retrade a buy with a target of 530. Stop loss could be trailed to 490. And second would be one Industar. This could be an interesting play because the stock in the last 1 month had gone through a 7-8% correction from 365 to almost 335 levels. and then from 335 it's come back towards 340 plus mark, which means that this 335 odd mark could be considered as a decent short-term support. So keeping that as a stop loss, would look out for targets in the range of 365 in the star.
Alright, so those are the BTST ideas coming in from our experts, and yes, keeping an eye on the markets. We are once again sub 22,500, or we are actually lingering around those levels. But on that note, we slip into a break. When we come back, we will tell you the course of the market over the last 15 minutes of trading session.
Welcome back. Well, the Nifty has stabilized for what it's worth. So we are now around that 22,490 mark. But individual movers, Emami, for instance, it was higher by 14% throughout the trading session. We just spoke with the management around 20-30 minutes ago, and since then there's a further leg up in the stock now. It's 18% higher, so management clearly confident about that double-digit growth, talking about a bit of an acceleration as far as the volume growth is concerned, hopeful of a rural recovery, and the margins are expected to be around the current levels itself, despite moving around their ad spends as and when the opportunity arises. So clearly a lot of focus on top-line growth right now. But a lot of stocks are buzzing around on heavy volume. So let me take it across to Ansh to get a gist. Ansh, it's been fairly volatile at the index level on account of expiry. But what are the other big takeaways that you are looking at right now in terms of the price volume buzzers?
Right, so Bata India will be the first stock in focus, as the stock seems to have given a slight breakout from that reverse head and shoulder chart pattern, though the prices have actually come down. If it goes above that 1380, 1390 level again, then the stock could become good positive. Also, today's volume is more than 9 times its average volume of last 20 sessions. Apart from this, Sun TV will also be in focus, as the stock has actually given a breakout from its downward sloping resistance trend line, which was intact for 7 to 8 sessions, along with good volume as well. Lastly, Emami will be in focus, as the stock has actually given a breakout from its horizontal resistance zone, which was intact from last 8 months. Also, today's volume has shown a good spike of around 25 times its average volume of last 10 sessions, indicating very strong participation in today's move. In addition to that, the stock has also touched 2-year high level. Now, apart from this breakout stocks, there are high chances of Pyramid Enterprises getting into ban list tomorrow for FNO. So keep an eye on these stocks.
Guys, those are the volume buzzers then. Let's take the discussion on the markets forward, and let's talk about the auto and auto ancillary space in particular. Actually, Varun, how is that particular segment of the market looking to, especially the auto ancillary space? Because if you look at the returns, it's actually had good returns over the last 3 months or so. So what's your take coming in on the auto ancillary space? How do you see it poised going ahead?
A complete derivative of auto companies. So we have to discuss about how auto OEMs are panning out. Now, if we see as per numbers, four-wheelers, despite the high base, running on a high base for last couple of years, we're still seeing demand to sustain there, and volume still being on the positive side. So four-wheelers are continuing to do well. Two-wheelers are an absolute bull run of their own, right? So in terms of business, in terms of growth on the ground, etc., two-wheelers have been seeing extremely sharp demand. Adding on to this, we saw in terms of CVs, Ashok Leyland also coming and reporting well. And we saw that numbers for CVs also starting to pick up. Apart from that, if we see tractors, there's a lot of hope around the entire monsoon, etc., to be good and things to pan out well there. So if all these segments of the autos are doing well, I don't see any reason why auto ancillaries, despite the run, should see correction. I definitely see that these will remain strong. To the time you don't see weakness in the auto OEMs.
So expect auto ancillary stocks also to actually perform well, this given the fact that it expects the auto segment as a whole actually to perform well. But what's your take on that, Sudeep? Do you see these auto ancillary names in isolation, or do you also correlate to that when you talk about the technicals? What are the charts indicating? Are they moving in tandem with what the auto players are doing, or in isolation?
See, they're largely moving in tandem, and if you see a lot of stocks like say FEM or a few other names in auto ancillaries, we have not seen deeper correction over there. So even in the last 15-20 days, whenever we've seen auto stocks moving well, the auto ancillaries have also followed suit. So I guess when the markets bounce back, these will be the first spaces along with defense and railway stocks. as well as the CPSE space, which will see a leg of an up move in the first place. So I am very bullish on auto as well as auto ancillaries. However, I'll just keep one thing which I would like to say, tell to all the viewers is that whenever you are buying now with respect to the budget or with respect to the entire auto space, buy it in a staggered manner rather than buying it in one go.
Staggered approach might be better than buying in one go. That's the view coming in. But as we are talking about a lot of important events lined up, and tomorrow, of course, in the evening, we'll get the GDP data for Q4. Now, the RBI projected rate in the annual report that came was talking about a real GDP growth of around 7%. But if you just talk about Q4, the expectations are on the weaker side. It's a broad range that we have. Numbers are from 6.2% to 7% plus, because SBI Research, for instance, is expecting that the GDP in Q4 could be a real surprise at around 7.2, 7.3 thereabouts. But the rest of the consensus seems to be towards that 6.7, 6.6% mark. Because in the quarter gone by, there was a bit of a weakness when it comes to the manufacturing as well as the services sector. So both of them were fairly muted. There was muted contribution from the agri sector as well. And most of the economists believe that this is going to be one of those quarters wherein we'll see a weaker number, because if you look at the rest of the 3 quarters, we were doing a better than 7% growth, but this quarter might be muted. But just listening into the commentary that we've got off late and the commentary coming in from the RBI, there seems to be a bit of a risk in my mind that there could be a number which is potentially better than 6.7, but the consensus as of just a few days ago was around that 6.7% thereabouts, and that will have an impact in terms of the rate cut cycle going forward as well, and what happens to the RBI decisions. But for now, this is what we are expecting, a growth rate of around 6.7, 6.6% in Q4 FY24. But shifting focus away from GDP and individual sectors, let me talk about a few stocks. Then Emami, as I pointed out, is up 17%. Paytm is the other one, which is up around 5%. Would you have a view on this, Varun? Paytm, the stock has been doing quite well, and if not just Paytm, put in the pool the rest of the new age tech companies as well, the Zomatos and PB fintechs of the world.
Active coverage in these names, but as regards the fintechs, etc., we are already seeing business absolutely rocking for them. We keep hearing about all of these new age technology businesses doing so well, be it Zomato, be it Blinkit, be it any one of them. And incrementally, we are not only seeing people using this in the metro areas, but we are also seeing the penetration to be pretty high for all of these, and the acceptability being very high in tier 2, tier 3 towns as well. So our teams went across India. We just traveled about a month back. There were 11 teams which went to about 15 states. And we really covered, and we got to understand that the acceptability of technology and these platforms is significantly high. So I really think that these are the companies of tomorrow. So they are doing well. So we are yet to have an active coverage, so I can't give any formal recommendation on it. But yes, on the ground, we are hearing pretty optimistic things about the usage around these names.
Right. Kunal, let me talk about one particular segment which was down and out for the last couple of months, but we've seen actually a good revival over the last 3 months at least, and that is the diagnostic space as a whole. What's your take coming in on some of them? If you look at Vijaya Diagnostic in the last 3 months, seen a spectacular run of about 28%. You've also had Metropolis also play a catch up along with Dr. Lal. What's your take coming in that diagnostic space? Do you think that the up move that they have registered is here to stay now?
I think there's a decent trend in the making for many of these names. Metropolis is something which I think on the chart looks specifically very attractive. It had a touch and go moment, I think, towards the 2000 mark, a few trading sessions back. But then it's come back again to the 1900 levels. But the near-term trend has been very bullish. The stock has consistently made a pattern of higher highs and higher lows. So I would probably expect that if once this retracement leg is over, the stock would probably make a dash back again about that 2000 levels and go for a fresh high, at least swing high for itself. Lalpath Labs, on the other hand, I think is also very interesting because the stock on the monthly charts is forming an inverted head and shoulder pattern. So 2700, 2750 is apparently the breakout or the neckline of this inverted head and shoulder pattern for Dr. Lalpath Labs. And I would sense that whenever the stock breaks past about this 2700, 2750 mark, we could be looking at least another 300 to 400 points upside on the stock pretty soon post that. So that's another name to look out for. Vijaya Diagnostic, I think, had a rally about 800 mark. Yesterday or day before, I think the stock had moved to 830, 840 plus levels. Today again, it's come back to that 800 mark. So net it's consolidating at the 800 levels, but again looks attractive because many of the, most of the stocks from this space have been showing signs of consistent uptrend over the last few weeks.
Right, so those are the diagnostic space. Actually, let's talk about Apollo Hospitals. Let's be in the healthcare space as a whole. It's all set to report its Q4 earnings. Let me actually go across to my colleague Shrishti, who's here to tell us what the street is penciling in for the quarter gone by for Apollo Hospitals. Shrishti, over to you.
So a decent set is expected from Apollo Hospital this time around, because on a sequential basis we are expecting just the flattish growth for the company, while on a YOY basis there could be a double-digit growth across the numbers. Why so a flattish growth we are expecting? Because on the occupancy level, the ARPOB numbers, we are not expecting a significant jump over there, and that could contribute to the numbers. So firstly, onto the revenue figure, we are expecting 4,907 crores in the top line. EBITDA is expected at 626 crores, and the margins are also expected to be flat sequentially at 12.8%. And lastly, onto the profit figure, 253 crores is what we are expecting. Now looking at the factors at play, then the growth in the ARPOB as well as their health core operations could boost the earnings this time around. But other than that, the primary care and the diagnostics is also expected to support the earnings on the back of a better operational performance. If we talk about their hospital business, that is expected to show a growth of 13% on a YY basis, but the hospital margins are expected to be down about 20 basis points on a sequential basis. The occupancy is also expected to remain flat sequentially at 66% this time around, while their AHLL business is expected to report a 20% growth on a YOY basis. So not a great set expected from Apollo Hospitals, but apart from that, from the management commentary, we will be definitely watching out for the updates on the capacity expansions at their Pune, Hyderabad as well as their Kolkata and Bengaluru facility, and how some of the newly added capacities are helping into the numbers. So all eyes on Apollo Hospitals.
Yeah, watching out for that, most likely post-market hours today. But in the meantime, Varun, before we let you go, talk to us about what's been the latest change in your recommendations post the earnings season. Any big upgrade, any big downgrade, anything which becomes a very high conviction buy?
Honestly, there is not a very big change that we are seeing. Trends have been more or less fine across sectors that we have been seeing. But yes, couple of sectors which I would strongly recommend that one should keep on radar. One is the banking space, as we discussed, considering if there is continuity, and which is a higher probability event, which we think. If there's continuity, banks should be the best space to be in. And the second one would be technology space, IT, which is seeing some correction right now, considering the fact that yields in the US have shot up and there's kind of a correlation where people go and sell IT companies and that. But one has to keep in mind that IT companies will come back very fast the moment you start seeing yields in the US again coming down, and which is an eventuality. It might not happen in a month or 2 months, but it's an eventuality. And these are great businesses available at good multiples. So excited in both the spaces because of the valuations over here. Yeah.
All right, so that's the take coming in on the IT space. And as
if you like this video, then like, share and subscribe to ET Now.